Hi, welcome back to Father and Son Investing. You may have noticed that the CPI number came out today. What is CPI number? It is the Consumer Price Index. That is a statistic calculated by the Bureau of Labor Statistics here in the United States, and it gives us an idea of the inflation rate. Now today, we're not going to discuss the breakdown of those CPI numbers. What I want to talk about is the CPI number in relation to your I bonds, and what does that mean, the number that came out today? If we look at the announcement, we'll see a couple of things here, but the biggest one here says latest numbers unchanged. Now I know that can be confusing because they're talking about an 8.5% rate of inflation for the month of July. Remember that that is year over year, so compared to July of last year. But when they say it's unchanged, they're comparing that to June of 2022, so the previous month. This illustrates numerically and in table form what I'm talking about. So we can see that in June of 2022, the rate of inflation month to month was 1.4%, but in July we get a 0.0 here. So that's what they're talking about when they say that it is unchanged. Now this is important when it comes to calculating the rate of inflation for your I bond. This table here illustrates that. So the 2 months that we are interested in are March and September, because each half year, semi-annually, the semi-annual inflation rate is calculated based on the difference in what is called a CPI number from September to March and March to September. For instance, if you're wondering how they calculated the semi-annual inflation rate for the latest I bond date, which was May 1st, 2022, they took the CPI number from last September, and they took the CPI number from March. To calculate the inflation rate for a period of time, we're going to take the current CPI number, subtract it from the previous CPI number, divide it by the previous CPI number, and multiply it by 100. So now we'll just spend a few minutes talking about projections for what your I bond rate might be come November 1st, or the next time that your I bond interest rate changes, because remember, it changes every 6 months based upon the date that you purchased your I bond. So the CPI number for July is 296.276. You can see that's very close to what it was in June. It was actually just a slight decrease, but essentially it's the same number. So if there is no change at all for the next 2 months, we will still have a CPI number of 296.276. We do the math and we come out with a semi-annual rate of 0.031. Of course, we're going to double that to get the annual percentage rate and your next I bond rate. Now that is if the Fed can keep the month-to-month inflation rate at 0%. I actually was shocked that they managed to do that this month. I didn't think that was possible for them at all. Anyway, your rate then on your next 6 months of I bond would be 6.2%. Now what if the Fed manages to keep the next 2 months of inflation month to month at 0.5%. Well, then your I bond rate would come out at, we're going to take 0.41 and multiply it by 2. You're going to have 8.2% on your I bond the next time the rate changes. Now, what if the Fed can keep it running at what it has averaged year to date, month to month, and that would be 0.87%? That would give us a CPI number of 301.304, and you'd be looking at essentially no change in your rate. It would still be 9.6% on an annualized basis. Now, what if this last month, July, was just a blip, and it goes right back to where it's been? Remember, if you look closely at the numbers, the reason this CPI index stayed the same was essentially that oil prices came down so much. But other things, such as food and electricity, went up significantly. So what if the inflation rate month to month goes right back to 1.4% for the next 2 months of August and September? Well, then we would be looking at a CPI number of around 304.467. That would give us a semi-annual rate of 0.59% or 59%. And we double that and we come up with 11.8% is what the next I bond rate would be. Now, these are significant changes compared to what I was talking about in July. And again, it's because the Fed just managed to stop inflation month to month cold, which I really didn't think they stood much of a chance of, but they pulled it off for the month of July. So there you have it. You could be making as little as 6.2% at the next I bond rate change. You could be making as much as 11.8% at the next I bond rate change. I think if it's still running at what its average year to date, that might be a more reasonable estimate. We're still looking at the 9.6%, and we would hope for at least 8.2%. We'll do an update again in September for the August numbers and try to project out what I-bonds might be doing the next time the rate changes. I hope this information was helpful for you. I hope you learned some things about how this percent is calculated. If it was, please give us a thumbs up. Share this kind of information with a young person in your life. I-bonds are still a great interest rate right now. Even if it doesn't do anything else, you're still getting 6.2%, which is way more than you're going to get from a high interest savings account. Until next time, enjoy your investing.